Click the bell icon to get latest videos from Ekeeda.
Hello friends, sometime in a question they give you 2 or more years trial balance with the help of which we are required to prepare vertical income statement. In such case, how to interpret the information and to prepare a vertical income statement as well as balance sheet, that will be understanding with the help of this question. Let us go through the question. Masa Limited was formed and incorporated on 1st April 2012. You are given the following trial balances on 31st March 2013 and 31st March 2000. You are required to prepare vertical statement for both the years in columnar form suitable for financial analysis. Let us mark trial balance. Land and building, this will be part of fixed asset. Machinery, fixed asset. Furniture, fixed asset. Sundry debtors, current asset, quick current asset. Cash bank balance, current asset, quick current asset. Sundry creditors, current liability, quick current liability. Outstanding expenses, current liability, quick current liability. Sales, that is first item of income statement. Purchases, it will be part of cost of goods sold. Opening stock, part of cost of goods sold. Administration expenses, will be part of operating expenses, administration expenses. Profit and loss, opening balance, this will be added to net profit after tax. Selling expenses, share capital, part of shareholders fund. Unsecured loan is part of borrowed fund. Adjustment, closing stock as on 31st March 2014 is rupees 4 lakh. This is closing stock as on 31st March 2014. That means on 1st April 2015 it will be opening stock. Vertical income statement for the year ending 31st March 2013, 31st March 2014. With the help of two trial balances, we will be preparing two income statements for respective years. First we have sales 20 lakhs. Purchases, it will be part of cost of goods sold 12 lakhs. Opening stock, there is no opening stock because it is incorporated on 1st April. So opening stock here it is blank. And closing stock here we have as adjustment as on 31st March 2014 4 lakhs. For year 31st March 2014, they have given amount of opening stock 3 lakhs. This is opening for financial year 13-14. That means same amount is closing for financial year 12-13. So here closing stock we are required to consider 3 lakhs for the first year. So cost of goods sold we got 9 lakhs for the first year. From 20 lakhs we will be deducting this 9 lakhs to arrive at gross profit. It is 11 lakhs. From this we are required to deduct operating expenses. Administration 2,76,000. Selling 80,000. Gross profit 11 lakh. Less operating expenses, admin plus selling expenses 3,56,000. 11 lakh minus 3 lakh 56,000. Finally, we have net profit 7 lakh 44,000 for 31st March 2013. Let us complete for 31st March 2014. Sales 30 lakhs. Opening stock 3 lakhs. Less cost of goods sold. Opening stock 3 lakhs. Purchases 15 lakhs. It is 18 lakhs. Less closing stock. As on 31st March 2014, it is given 4 lakhs. 18 lakh minus 4 lakhs. Cost of goods sold 14 lakhs. From 30 lakhs, we'll have to deduct this 14 lakhs to arrive at gross profit. It is 16 lakhs. Less operating expenses. Admin 3 lakh 70,000. Selling 1 lakh 10,000. It is 4 lakh 80,000. So net profit 11 lakh 20,000. Gross profit 16 lakhs. Operating expenses deducted 4 lakh 80,000. Final net profit we got 11 lakh 20,000. So we have completed profit and loss statement, income statement for both the years. Let us proceed for balance sheet. Masa Limited vertical balance sheet as on 31st March 2013 and 2014. First part, sources of funds. Shareholders fund. In shareholders fund, first item we have share capital. Share capital, first year we have 20 lakhs. Next, profit and loss account, opening balance. In reserves and surplus, we have profit and loss account, but as it is a very first year, there will be no opening balance. Current year profit is 7 lakh 44,000. This will be included in now reserves and surplus. Share capital 20 lakhs. Profit and loss account 7 lakh 44,000. By adding these two, so we got shareholders fund 27 lakh 44,000. Unsecured loan, that is part of borrowed fund 10 lakh 36,000. Unsecured loan 10 lakh 36,000. Now we can find out capital employed for the first year. So it is 37 lakh 80,000. Let us complete for the second year. Share capital 20 lakhs. Last year's profit and loss account closing is 7 lakh 44,000. It will become opening in current year. Current year profit 11 lakh 20,000. This will be added to opening balance. This is 18 lakh 64,000. This will be added to share capital. So shareholders fund is 38 lakh 64,000. Unsecured loan 4 lakh 66,000. So will be part of borrowed fund. So capital employed 43 lakh 30,000. Let us proceed to second part of the balance sheet, that is application of funds. Land and building is a fixed asset. Machinery is a fixed asset. Furniture is a fixed asset. Fixed assets, land and building, machinery, furniture. First year total is 33 lakhs. Second year 36 lakh 50,000. Long-term investments. There are no long-term investments. So both the years we'll have to show it as what? Nil. Working capital. Current assets. quick current assets. Sundry debtors, quick current asset. Cash bank balance, quick current asset. And we have stock as non-quick current asset. Current asset quick, sundry debtors 3 lakhs, cash bank balance 1 lakh, total quick asset 4 lakhs. Non-quick we have stock 3 lakhs, 4 lakhs plus 3 lakhs, total current assets are 7 lakhs. Second year we have debtors 5 lakhs, cash and bank balance 1 lakh, closing stock 4 lakhs. Current asset quick 6 lakhs, non-quick 4 lakhs, total current asset for the second year 10 lakhs. From this we are required to deduct current liabilities. Current liabilities we have sundry creditors, quick current liability, outstanding expenses, quick current liability. There are no non-quick current liabilities. Current liabilities, sundry creditors 2 lakhs, outstanding expenses 20,000, total current liabilities 2 lakh 20,000. Next year creditors 3 lakhs, outstanding expenses 20,000, total current liability 3 lakh 20,000. This will deduct from the total current assets. First year total current assets 7 lakhs minus total current liabilities 2 lakh 20,000. Current asset minus current liabilities. First year net working capital is 4 lakh 80,000. Second year 6 lakh 80,000. We'll be adding this to fixed assets. Thus total assets for the first year 37 lakh 80,000. The second year 43 lakh 30,000. Sources of funds, total capital employed 37 lakh 80,000 for the first year. For the second year 43 lakh 30,000. That means balance sheet is tally in both the years. In this question we have learned how to prepare vertical income statement and balance sheet with the help of two trial balances given. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.